Consumer staples names actually hanging in there despite the market sell-off today. The group has been a big rally of late. Best performer in June, up more than 4%. Campbell Soup soaring today on M&A reports. Let's drill down on that and the entire group. Ken Goldman with us, senior equity analyst in food manufacturing and retail with JPMorgan. Nice to see you, Ken.
Always nice to be with you. Thank you for having me.
So the overall buying of the group, is this about dividends or deals?
I think a little bit of both. When my group is up, it's usually not a good sign for the rest of the market, right? People are looking for safety, so I'm sure there's some dividend part of it, but there's a little bit of M&A too. We've had some speculation. The New York Post wrote about Kraft maybe for Campbell, and obviously last week we've heard some speculation about Conagra for Pinnacle and so forth. So I think it's a little bit of both.
Yeah, let's talk about that Post report. Somehow it was news to investors that Kraft would be interested in Campbell's. We know Kraft is searching for a deal. We know Campbell's is looking at all strategic alternatives. The question is, why would a Kraft be interested in Campbell's when it's nearly almost all domestic? It's a very slow growing category or shrinking category, condensed soup. They've tried to turn it around a number of times, and it doesn't really offer a path beyond synergies to profitability from Kraft, which is learning the hard way now that once you squeeze all the costs out of it, there has to be another plan.
You make some great points. If Kraft were to be interested in Campbell, we think it would be almost purely from a financial perspective. Now, Kraft might want the brands, right? We can't just deny that the Pepperidge Farm brand is terrific. The Campbell Soup brand is iconic. But really, I think what Kraft, if they were looking at it, and I'm not sure they are, would be really looking for the financial accretion. It would be a very accretive deal, we think, for Kraft.
But wouldn't it prevent Kraft from ultimately making even bigger deals for a Mondelez down the road or another company? Because if Kraft bought Campbell's, then it would have that big snacks business and Lance, and then there's no way the antitrust authorities would let it buy even more.
That's correct on Mondelez. I don't want to get too speculative on what they might look at, but there has been some belief that Kraft would use or need to use its stock, its equity, as currency for the next large deal. Perhaps what 3G is thinking, and this is just me speculating here, I don't really know, is that they need that equity price to get higher, so when they do use it as currency for the big deal, it actually has more value. And maybe this is a stepping stone, hypothetically, if they are going to look at a Campbell Soup toward that end.
So if Kraft bought Campbell's, you said that it would be an accretive deal. I mean, back in, what was it, in May, we saw that huge decline in Campbell's Soup on their earnings, and now we've got it back basically to those pre-earnings levels because of the speculation noise in the stock. Are you telling me that Kraft is actually going to benefit from buying a company that just about a month ago was seen as really having a problem in terms of its growth prospects?
No, I don't think they are going to benefit, which is why we wrote in our note that we don't think a deal is likely to happen. All I'm sort of suggesting is if a deal does happen, it would be more for financial purposes, and they would be taking on an awful lot of risk in doing this. Campbell Soup has many issues right now. Still a great company. I think they'll have better days ahead of them. But right now, I would imagine that Kraft would have to look at that and say, boy, is that something we really want to take on right now when we're trying to improve our own business?
So if not Kraft, is there another one out there? I mean, is Campbell a target in your view, period?
Only as a breakup, and I haven't necessarily run the math on that to say whether that would work for everybody. But I don't think there would be another suitor out there for the entire business. And frankly, I'm not sure Kraft would want the entire business either.
Is there another company in your coverage universe that you like the best that might well be acquired by somebody else, either because you like it because it's an acquisition target or because you like the fundamentals of the business? I
like Kellogg here. When we're on the record, Kellogg's one of my favorite stocks right here. I like the fact that they're starting to turn around the cereal business. You can see some much better data with Special K coming out there. Their snacking business with DSD with getting rid of DSD has done better than anyone might have thought, I think including Kellogg itself. The stock's not at a big multiple and doesn't have any integration risk. I mean, think of all these other companies I cover, General Mills, not Kellogg, Smucker. They've all done deals lately, and they've all done big deals where their balance sheets have moved up higher. Kellogg hasn't really done that. Their balance sheet is much cleaner, so I think there's less execution risk as well.
Do any of these deals finally can bring back growth? Top-line growth has been completely elusive for any packaged food company, whether they combine big brands all together or spin off other brands. Is the sector going to grow?
No. I would not count on the packaged food sector growing again unless something dramatic happens. I would count on very limited 0%, maybe 1% growth with population if they're lucky. Most of these companies would be thrilled to have a positive number for their organic sales.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.